Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. First and foremost, this week, the market bottomed on Monday as we had expected and has been rallying ever since, even though there has been no winner officially declared as I speak this evening. Stimulus issues are clearly in the background, but only for the moment. This election has brought a lot of uncertainty, as Trump has still indicated that he might not step down, and this could lead to considerable chaos. I will remind our subscribers that there was an excellent TED Talk very recently about this very issue and is well worthwhile looking into. Second, as always, thanks to everyone who likes this video and all our subscribers. I appreciate your help with the YouTube algorithm, as this allows us to bring you more and better content. So thank you for that. Third, as far as the overall market is concerned, it was a bit nip and tuck on Monday, but we remain comfortably above our overall market sell line based on the NASDAQ 100's bubble price, that's 7.4 times book value. However, at this juncture, I would turn my focus to the super growth price of the S&P 500, that's 3.5 times adjusted book value, as that would be a potential market sell point. That was the maximum valuation for the S&P 500 in 2000. And is certainly in easy range of the market today. That, by the way, could give us about another 8 to 9% to the upside. So you should have a pretty good idea as to the current parameters of the market today, that is, the potential peak and the NASDAQ 100 floor. I should point out that this number is dynamic and changes with the market, particularly during the earnings season, as is happening today, as a lot of new balance sheets are flowing in. If you're a client, however, watch the weekly webinar to see where this is this week. Finally, as a reminder, for those who are watching FANG Friday who are not yet SVA clients, but are interested in what you see, send us an email and we'll get in touch and we'll see if we are right for you. With that in mind, let's take a look at the FANGs. Well, let's start off with Amazon, because last week on Friday I said, look, Amazon is coming right down to its HB3, and if it gets there, it's going to be a very nice buying opportunity. Now, it missed that by about 2 to 3% on Monday, but it got very, very close, and close enough so that it was worthwhile making that trade. It's been doing very well ever since. And I don't think I would worry about this until we get close to the HB4. So that's a little way off right now. Alphabet, well, you know, what I've said about Alphabet, this is the stock that I said you take your heart in your hand and just buy it, and that has been working out very, very nicely. Now, in the past week, however, in fact, just yesterday, the stock got very, very close to its MSG price. And remember what I said about that MSG price. For the past 5 years, the stock has been unable to even reach there, let alone exceed it. So at this juncture, I would be watching very carefully for this stock to perhaps to peak out. NVIDIA, well, remember we talked about NVIDIA. It had that very, very sharp decline, 100 points in 2 days. Not even time to even think about getting a sell signal in. So I just simply said, just hold on and let's see what happened. Well, it rallied, fell back again, but is now well on its way. And I think that if this is any indication, should go higher from here. Facebook, I had really had high hopes that this stock might give us a terrific buying opportunity. There was Friday. See that Friday? That lovely drop there. And I said at the time, last Friday, give us one more day like this and we're going to be down at the mid-super growth price. That's 5.5 times book value, and we will get a perfect buy signal. Well, Monday was a bad day, but Facebook was nice and strong, and it's been strong ever since. Unfortunately, we didn't get our trade as I hoped. Netflix, well, continues to kind of flounder on either side of its HB4, and as you will know from the last couple of weeks, I continue to be concerned about a stock which should be the very apotheosis of the COVID-19 economic condition, and should be doing very, very well, and it isn't. So I continue to worry that this stock may be trying to tell us something. Furthermore, when stocks trade either side of a breakpoint continually like this, this is what we call sloppy trading. And very often that has led to major sell-offs. Microsoft, the same story as Netflix now. Okay, again, trading either side of its HB2 without any resolution. Again, sloppy trading. This is the kind of thing that does concern me about the outlook for this stock. Finally, Apple. Well, the problem with Apple is that, going back a few months, we had a perfect bottom when the stock actually fell to its fair market value line, which is this dotted line right here. That, by the way, is very, very common among senior stocks. Okay, the fair market value measure actually almost acts as another breakpoint for the for our in our SVA work, and it certainly did with Apple that time. Now, the stock had a lovely rally and peaked right here at its HB5, but of course you don't see that now, do you? It's the HB5 is way below that. The problem, of course, is that we had a new balance sheet and the trend of the balance sheet, which had been falling, then kind of resumed its trend and left the stock apparently high and dry. However, we got a perfect sell signal on that stock, and it had a nice fallback. Now, currently, at the present time, the stock is rallying again, and what you see here is that the breakpoint values have got a sharp V. Well, that occurs in our algorithm when we have a falling balance sheet, but due to share buybacks, the algorithm does not presume to say, oh, well, this is going to keep on going. So it simply picks up where it left off with taking the future earnings into the balance sheet condition as soon, and you see there's where the company reported, as soon as the reporting season is over. So what I would say is that the new HB5 is not this trend line down. The new HB5 is likely to be $128.61 as of today, at any rate. So we're going to watch that very, very closely. Okay? Anyway, as we wind up the week, we are back from the brink of an overall NASDAQ sell signal and hoping for enough solid momentum to carry us to the super growth price of the S&P 500, where we would face another kind of issue. As of last Friday, Amazon was close to offering a beautiful trade at its HB3, and that came on Monday as we had expected. I know that I had violated the forecaster's rule of never giving a target and a date on the same sentence, but the HB3 price for Amazon was very close, and indeed the shares held up just above that level. Alphabet, my heart and hand trade, apparently could care less about a government investigation and heavens knows what else. As my good friend Barbara Gray at Pennock's Idea Hub says, this company's a hydra. Chop off one head and 3 more grow back. However, I am still from Missouri as to whether the stock can exceed those previous valuation highs. That is to say, it may not reach its MSG price, 5.5 times book, as my long-term chart of the stock shows. NVIDIA, after a promising breakout, set back to the HV4 20 times book, and a bit below that, but as I had expected, it has broken back through that level again and has nicely recovered with the market rally. Facebook reached its upside target, its old high at its bubble price, set back, and I was hoping for a decline to the MSG price. Oh gosh, I was hoping. And then, like Amazon, and seemed to kind of promise it would do that last Friday, but it rallied prematurely and dashed my hopes for an easy trade. Now I guess the question is whether it will revisit its old high, its bubble price, that's 7.4 times book, its old maximum valuation. Netflix continues to waffle on either side of its HB4, and I continue to worry about it. Microsoft, same thing. It looked as if it had abandoned all hope at its HB2, but is trying to rally back again. As I've noted before, sloppy trading is often a sign of impending weakness. And finally, Apple is heading back to its recent high and new HB5 peak price based on its revised balance sheet as of last week. The company continues to buy back lots of stock, and I continue to wonder if, like several stocks that I've shown you in the past, like Home Depot, if they are doing enough to propel it to the kinds of valuation extremes that many stocks have achieved. My hypothetical $4 trillion market cap, remember a few weeks ago, based on aggressive share repurchases, remains pure pie in the sky, of course. But others have done something very similar, and therefore technically it is something to keep in mind. Watch those structural breakpoints. They will tell us if it's all a dream. As for the overall market, as I said 2 weeks ago, maybe we've already seen the extreme and missed our precise super growth price or SG price, 3.5 times book, by a mere 2%. And then again, maybe it's still in play. You now know the general current parameters of the overall market. And as I have said before, SVA is an ideal source of information and support to get you through not only a bull market, but also a bear market. And bear markets need not be nearly as scary as they sound. And nothing else, you may wish to check your own portfolio to see how safe you are. Anyway, if what you have seen has interested you and you'd like to see what your stocks are telling you, then send us an email at info@strategicanalysis.ca. Clients get a lot of benefits, not just access to over 3,000 charts of North American stocks, but daily commentary, trade ideas, and weekly webinars where we go into the nitty-gritty details of how to use the charts in order to become a better investor. When you sign up, I will personally take you through our system on a one-on-one video conference and show you how to use it to become a more confident and profitable investor. If this sounds like something that you think is in line with your goals, then let's take the next step together. For now, we're enjoying that post-election rally and we can relax a bit. Anyway, This has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.